Let's go to Steph now, because Steph's talking about petrol prices.
Morning. Yeah, and it looks like Carol will be using some this morning, the way she's going. Yes, morning everybody. Yeah, you've probably noticed that petrol and diesel prices have started to creep up again in recent weeks. The RAC Fuel Watch says that in June, on average, the price of unleaded went up by 1.5 pence a litre, and diesel went up just a little bit over that as well. And it's likely that another rise will be coming our way soon. And with me now is James Spencer, who is from the fuel consultancy Portland. Morning to you, James.
Hi.
What's going on?
Well, oil prices have obviously increased quite considerably since January. They hit a low point, $25 a barrel in January. Over the last 6 months, that price has actually doubled to $50 a barrel, which probably has had less media attention simply because $50 a barrel seems still relatively low compared to maybe the recent past. So prices have been creeping up, and that's obviously been seen at the pumps filtering through.
What's going to happen next then, do you think?
Well, obviously, there's two parts of the oil price. So you have the underlying oil price in dollars per barrel, but you also have to factor in pence per litre. So oil is bought in dollars and has to be converted into pounds, so or pence per litre. So the latest forecasts from the likes of the RAC are really taking into account the drop in sterling, which has pushed up prices. So as a result of the drop that we saw after the referendum, you're actually seeing prices about 3 pence per litre higher than they would have been if the exchange rate had stayed as it was. So that doesn't mean that will continue, that trend will continue, but from an oil market perspective, all eyes are really on the exchange rate, because actually after the referendum, the oil price did actually, in dollars, came down a little bit.
And so because it came down a little bit, but the pound came down, it kind of just...
Well, it didn't just even out. It actually, so we had a very unusual situation where the oil price fell, but in pence per litre it rose.
Right. And so now with the oil industry, given, we've talked about how hard it's been hit, do you think things are starting to improve for the oil industry then?
Numbers talk, so $50 a barrel is a lot better than $25 a barrel, but really for places like the North Sea, mature oil fields where costs are quite high, that's probably still not where they would like to see it. The other factor, of course, which we've always talked about in oil, is shale oil. And it is fair to say that in the first half of this year, a lot of shale oil exploration went out of business. And the question now is, if the price keeps ticking up, will those businesses or new businesses come back in, which will effectively suppress the price again?
Because it's quite a cyclical market, oil, isn't it? Because they stop investing in exploring it, getting it out of the ground, and then we don't have enough of it, and then the price goes up, and then it kind of...
Yeah, I mean, it's incredibly cyclical, and, anybody who's been in the industry is well aware of these cycles. I think the interesting thing is shale oil, because whereas conventional oil fields have quite a long lead time, so ordinarily, as they cease production and stop exploring and stop investing, you would expect a long-term rise in oil prices. The unknown here is shale oil, which, if you imagine it like switching a light on and off, it's a very different type of technology. So there is some sentiment that says as the price hits a certain level, $60 maybe, 65, the shale oil industry will come back in and we'll have this glut of oil coming onto the market, which will again push the prices down, which is good for consumers, but for places like the UK, where we do have a very strong offshore sector, that's not great news.
Interesting. James, thank you very much for your time this morning. That's it for me.